How's my day been? Good afternoon, everybody. Thanks very much for joining us here. We're going to be looking at the German market. For those who don't know me, my name's Richard Betts. I'm head of content, as it says here, at Real Asset Media. And our focus is less on the day-to-day news, breaking news. Our focus is really on investment strategy, research, analysis, thought leadership, market intelligence, which we'll be benefiting from here in this session, the kind of things that are driving the market, so that we can see what the trends are and where we think we're heading. Fascinating time at the moment. Thank you all for being here. I've got a series of questions, but I'm also very interested to hear what your thoughts are and any questions from you, and we'll try to deal with those as efficiently as we can. I have a super panel, and it would be wrong not to start with you guys. So let's start with you, Lars, just with a quick introduction of yourself. And also, I noticed, because Lars was on a panel with me at Expo Real, that actually the company name has changed since then. So maybe let's start with that.
Thank you. It did. We changed our name from DLE to Periskop Partners, and I'm very glad to be here.
You may need that slightly nearer to you.
Okay.
Yeah, that's better.
So, once again, thank you very much for having me and having us here on the panel. We changed our name recently from DLE to Periskop Partners as an expression of more activities we have under our roof. And I'd be just interested, as part of the introduction, how many German speakers we actually have in the audience. Okay, so that's us convincing ourselves about the opportunity of the German market.
Well, we have to start somewhere.
Yes, yes. So headquartered in Berlin, slightly north of 2 billion in assets on advisory across land development, senior living, logistics, light industrial, credit, and we just recently launched an opportunity fund.
Great, Kruno.
Yeah, I'm Kruno, the CEO of Instone. Some would say the leading resi developer in Germany. We have 400 employees. We are a listed company, and we are a classical trader developer developing low to high price segment, multifamily houses in all the metropolitan areas. We have currently 5,000 units under construction, approximately 3 billion of GDV, and another 4 billion is being prepared to start as soon as possible.
Great, thank you. Patrick.
Yes, Patrick, founder and head of the real estate investment branch at Hauck, Aufhäuser, Lampe. Short term is HAL. HAL is one of the oldest private banks in Germany, but very successful in the last years with a huge growth, and will become a member of the ABN AMRO Group, let me say in Q2 this year. And as a real estate investment branch, we have 3 investment strategies, with data center as the most dynamic one, social infrastructure, and food retail, and focusing on these niche things. And that's what we're doing.
Great, some really interesting sectors there that we've got covered as well, which is interesting. Manuel, over to you.
Yes, good afternoon also from my side. I'm Manuel Köppel, Managing Director of BF.capital. We are an asset manager in private debt with roots in real estate debt. So that's also the part of the business that I'm heading. And we have approximately 2 billion in assets under management, thereof roughly 500 million in real estate debt. In real estate debt, we are from our funds, we are a lender, so we do direct lending business. We lend against real estate projects, and in the wider private debt area, we are a fund-of-fund manager. So we see a lot of other strategies as well, and they are not only real estate but also corporate and infrastructure debt.
Great, and last but very much not least, Caroline.
Yes, hello, good afternoon. My name is Caroline Gronack. I'm the Managing Director of Apleona Invest. Apleona Invest is part of the Apleona Group, a big German-based real estate management company with more than 40,000 employees. I'm leading the investment team, and my passion is real estate for demographic change, and my job is to develop tailor-made investment schemes for our clients and investors.
Great. So really interesting panel here, lots of different perspectives. And again, feel free to bring your perspectives into the discussion as well. Caroline, let's start with you, just in terms of, I suppose, where you think we are at the moment and where we're heading in terms of the German market. And I'm very interested to hear other perspectives as well. But Caroline, let's start with you.
Okay, where are we? I think we are either close to the bottom, we are at the bottom, or we are already past the bottom. So I think it's the best moment to step into real estate in Germany, although I'm also convinced that everyone knows, but us German, we don't know so much about it, and we still think, wow, it's bad times. But if we don't invest now, I think all international investors will come before us, and there's nothing left for us. So everyone investing in Germany, particularly institutional investors, you shouldn't wait for our colleagues abroad to get into the market.
Interesting. Okay, good. And I have had that discussion over the last couple of days here, which is, is it that Germany feels that it's not in the right place and everybody else thinks, oh, Germany is a bit of an opportunity at the moment, or where are we? Lars, maybe picking up on your kind of view on that. How do you see, do you agree with Caroline? Do you strongly agree? Do you strongly disagree? Where are we?
No, I'm fully supportive of your call to action. Yeah, I think when I do acknowledge that, particularly coming from roadshows from Japan in December and Middle East in January, that Germany has looked for a while quite opaque and not familiar to international investors because of the lack of stability. I think we're now coming back to that. We are close to have a coalition government that seems committed to deliver on a few very important policy agendas. We have potentially also an end of a major conflict in Europe, which will help the overall sentiment. And I think, as Caroline pointed out, often Germans are rightfully criticized to see the glass half empty than half full. So I think we would share certainly also the perspective on the opportunity being now.
And that's interesting as well. Other conversations that we've had when I've been talking about Central and Eastern Europe, for example, investors have been saying, well, we are actively beginning to look there, but actually we're not going to jump over Germany in order to go to Poland and Eastern Europe, that actually will be allocating capital to Germany first and then Eastern Europe afterwards, which is not great if you're in CEE, and that's but that's an interesting perspective, I think, that I've heard over the last few weeks anyway. Let's pick up a bit on I suppose the investors and what they are looking for. So Kruno, let's start with you on that one. So I guess what kind of investors are we seeing and what are they looking for?
I think the current investor space is looking for core, but they want to pay only value add. So this is what we are currently facing in the market. And when this will change, I think when the price correction is, let's say, really done, which is currently still not the case. So the sellers are expecting still too high prices. So there is I think, correction necessary. And there will be also appetite. And when you look at the transactions, I think there are two groups really active, or three groups. Institutional money, which is, I would say, the smallest bucket. Then you have family office money, which is always beating private equity money, because private equity still is expecting higher IRRs. And this is the market sentiment we are seeing currently on the ground. And on the other hand, we have, in our business, it's resi. We see a pickup of interest of owner-occupiers and also smaller buy-to-let investors. Here, I think the people have seen that we have been through the trough, and the price reduction in the market from, let's say, new build, also from existing properties, they have come to a halt. Where we see still necessary price correction is in the land pricing.
Okay, so land pricing for you is a bit of an issue. Okay, all right, interesting. Let's pick up a little bit. I think Patrick, maybe with you. I mean, feel free to give a view on anything that you've heard, but also in terms of asset classes. You know, if we're looking at opportunities and capital coming back, where should they be looking?
Yeah. First, if we have a look at the market, and we should divide between the asset classes. For example, food retail, we see increasing prices again in food retail. So there are bigger transactions in the last month in Germany we saw, and already increasing prices. So the bottom was there, and now it's increasing. Where should we have a look at? Yeah, in my perspective, the most dynamic thing I've ever seen in real estate or real asset is data center. So there's exponential growth. It's not a fashion trend; it's a mega trend, and we need much more space, much more capacity for data, especially in Germany, because of two main points. We are, let me say, at least 5 to 10 years behind the other European countries regarding digitalization, and we are the biggest economy in Europe, and we see the biggest demand in Germany. And if you have a look at the data protection in Germany, the Datenschutzgrundverordnung, it's very important for German companies to stay their data in Germany. And so the big operators do not know how they can raise their capacities in Germany. And so the demand is so high, and what we see too, for example, Stargate. Let me announce this a bit. Stargate, what is it? Read between the lines. It's yeah. You need data. Data is an advantage, and it's if you have data, you have power. But if you don't have the capacity for data, wouldn't work. So it's a bit like weapons, and the industry has to grow, has to create capacities, and so yeah, very, very exciting market. And even there, what we heard before, the German institutional investors are very cautious, and until today, and the investors who invest in data center are international investors. They see the opportunity. They invested huge amounts of money, billions of money in the US market of data center. They are already exiting because the American market is, let me say, 5 to 10 years before. And they're searching new targets. And for that, Germany is very, very attractive. Yeah.
Yeah, and of course, you know, you've seen in the UK and many other places in Europe as well that digital infrastructure is becoming an absolutely key area for governments in general, and that's certainly helping drive some of those. Let me just tackle a little bit the financing side. Manuel, it'd be good to get your take on that at the moment, because that obviously has been seen as a slight block on the market. We've had interest rates changing. What's your perception of where we are at the moment?
Yeah, we come from a very difficult environment, but we are quite optimistic regarding even the nearer future, because in the new business, newly originated loans, we see very attractive risk-return profiles. So you have lower LTVs, and not only the LTV as a percentage, but also the value is a lower base, and so you have the most attractive risk-return profile in the last years at the moment and for the months and years to come. That's one part of the truth. The other part of the truth is that the problem loans that are in the market will still need time to be worked out properly. And I don't expect the big wave of loan sales. So that's not the German mentality. The German mentality is more to do things over time and to do it slowly. And so I think we will, in the next months and even years, we will have both in the newly originated business, very attractive levels and really attractive also from an international perspective. 2-3 years ago, Germany was relatively unattractive for international lenders because we had large competition between the banks, low margins, high LTVs. That changed, so we are competitive in an international context. On the one hand, but on the other hand, we still will have these troubleshooting issues. So it's an interesting time because you will have both sides of the business in parallel. So for a longer period of time.
Okay, good. And it'd be interesting to get the perspectives as well on in general financing. From, let's say, the investment standpoint as well. Does that mean that at the moment investing in debt is going to be very positive in Germany at the moment? How easy is it to get things financed, for example? I don't know whether anybody has any views on general in terms of the financing side as well.
Maybe one point from my side before the others can give their view. I think the financing is quite difficult. So investing in debt is attractive because you can be picky.
Okay, good. Anybody else want to pick up on the financing side?
I can pick up, but I have something very interesting to say. Not having acquired any assets in the last 2 years, I have no experience how financing is, but from the market I know it's not so easy. It's difficult, and banks are, they are looking more and more into ESG and things like that, and maybe some assets which I'm very happy that I financed them for 10 years. When it comes to refinancing, I don't even know if it's going to be possible.
Maybe from my side, I think, as you said, I think it depends on asset classes. And the question, for example, if you have an office building which has been financed in 2018 or 2020, and you have now to refinance it, but the book value is not is not anymore there where it has been. So there is a lot of, let's say, issue coming up now in the next years to refinance existing loans, which could be a chance for let's say, debt lenders, of course. And the banks are, I would say, very selective. So it's very difficult to get senior debt on the projects. We are, let's say, for us it's possible. Why? Because we have a loan-to-cost ratio currently of 10%. So we have no debt on the balance sheet, so it's very easy. But I think it's a big issue in the market. So as mentioned, I think price correction is not everywhere in the books really done on one hand, and you have to differentiate between the products. Of course, data centers is a niche which is quite working really well. Resi is catching up. I think it's also an attractive area to be, but then commercial is still difficult. Yeah? So there are different, I would say you have really different types of assets, and for every type of asset there's a different view on it and a different scenario.
When I go through our 3 asset classes, let me say financing for data centers is not that easy because we have to educate the German banks. Everybody wants, but if we say, oh no, it's not Google or it's not Microsoft, well, okay, sorry, it doesn't work. This the two yes. But the other investment strategies like food retail are really food anchored and stabilized, core plus. It's quite easy, and even medical buildings, medical office buildings. Yeah, it's quite easy to finance at a normal LTV. Let me say about 50-60%. Yeah. It's good.
I mean, for us, land development is essentially an all-equity strategy, so we don't rely on financing. So land development is an all-equity strategy. We don't rely on financing on purpose. I think I agree with you that it's sector specific. In senior living, we find specialized lenders who are very comfortable, coming even from attached to the sector. I would say in resi it depends on your ESG conformity, and we see also a lot of development banks being helpful in certain federal states more than others. And I think for core logistics, we have a panel of European lenders, so we are not relying just on domestic banks. So we didn't find a constraint on the financing side.
Okay, good. You recently launched an opportunity fund as well, Lars. So,
yeah.
Given that this is about opportunities, so I suppose, what are you targeting there? Where do you see those opportunities?
I think, I mean, for once, I think it's important that we're targeting quite high returns for international investors anyway. I mean, coming when you talk to people from particularly the Middle East, for example, I mean, they really want to have mid-teen returns in order to look at it. Yeah? There might be the odd institutional investor or family office that is leaving it with 12%, but most often than not, you have sort of 15% net. Even now, some of the Japanese investors, because of the currency depreciation of the yen, are moving into the value-add opportunistic space to make it work. So, in terms of what we're targeting, it's lateral across all our investment sector teams, but and along across all the capital structure, but predominantly in order to get the team scaled up, we're looking actually to take stakes in operators, to make it an efficient strategy and have this additional equity kicker. We do like some of our homegrown sectors, of course. We have also an appetite here for medical office, which we find interesting. That isn't a sector team per se, but it's something that the team is very familiar with.
Okay, good. Let me pick up a little bit with you, Caroline, if I can as well. You mentioned at the beginning there that you're interested in some of the larger trends, things that are maybe outside of the current cycle, if you like, driving opportunities. So what are you looking at there? And I suppose, how's that informing your investment strategy?
Yeah, sure. It's like Lars already mentioned, it's part of the demographic trend. It's medical office buildings. We're all getting older. Societies are getting older, at least in Western Europe. So the kind of real estate we live in and we work in, but also we need to live, has to change. So all these kinds of buildings, I think it's a trend to invest into them. For sure, you're on the sunny side, because we will need more senior housing. We will need more medical facilities for the aging population. So also not directly looking at the returns which we can achieve now. I think at the moment we can get some very nice assets, some trophy assets, which maybe before went to other market participants. And for sure, we know where the future goes. It's not like offices or retail where we are still there sitting, okay, are people coming back to the office? Are we only doing online shopping in the future?
It's interesting that also discussions we've been having over the last kind of couple of months is about how retail's going to bounce back, which is an interesting one. Be good to get anybody's perspective on that, because certainly discussions we've had with investors in the UK have been about reordering their allocation so that actually office becomes less of it and they will increase retail. So it'd be interesting to get, is anybody seeing that kind of view in Germany or not?
No.
You're uncertain if you're going to tell me this. You can just tell me quietly, Patrick, and nobody else will hear. So.
Sure. The people are coming back more and more into the high streets, but it will not become the same as before COVID. So I don't believe in the bigger shopping centers. maybe in central and towns, food anchored, and then could work because the prices are decreased very low for these assets. Nobody wants to buy in Germany these, let me say, smaller food anchored shopping center. They could be quite interesting, but not high street shopping. Fashion is not that what we like and what we would do.
Okay, good. I'll come back to some of the other sectors and drill down a little bit more into that. But Kruno, it'd be interesting just to pick up on the development side, because obviously development is one of those areas that suffered obviously at the, with the interest rates and the changes. How are we seeing development? Is that kind of coming back? Will there be opportunities in it? What's your sense of that?
We are pretty sure that there will be opportunities coming up, and here again, I think it's important to differentiate between the different sectors. I think for office, it's really important to have a co-location, and this is currently, I think, the only really asset which is working if you develop it new. For resi, and here we have this paradox situation. The supply-demand imbalance is there. You have significantly rent price inflation, and this will go on because the completion rates are suffering, and they will suffer further. And that means that there is appetite still in the market. And to give you a feeling we have sold before this crisis started approximately 1 billion of GDP in a year. So this means roughly 2,500 flats. Last year, and I can't give an official guidance here because we are presenting our figures next week. So our guidance was 300 million plus, and I can say we get there. And for this year, we plan roughly 500 million plus, which means the market is not completely recovered, but it's clearly catching up. And regarding development opportunities for us, everyone is currently focusing on the pearls, which means it's zoned, it's permitted, it's really good location, there's no risk, and really high return. We have 7 of those under exclusivity, so we plan to buy those. And in addition, we look at really bigger land plots where maybe zoning is started, but the problems have to be still solved. I think this area is attractive because you are currently buying it in the trough, and there's stress in the market. The banks are struggling to give senior financing for such kind of product. And this means for developers, this is the right moment if you have the money, if you have the cash to go into this sector. It's better to buy now than before the crisis started, I'm pretty sure.
Exactly, I can support this 100% from the lending side. So we are still lender of development projects, not so much as we used to. So we like value add situations, but also still development, and I fully agree. So land prices is a big issue. So for us, it's very important that there's a new price. So anybody who buys now at a new price and has a business case with that new price can be financed. So why not? It's more difficult for the banks, so that's the space for the debt funds. And we also do senior lending strategies. We also do whole loan. Not as 2-3 years ago, where the debt funds were focused or had the tendency to be focused more on the mezzanine debt. We can do senior debt as well, and we like to do that, and there we benefit from the bank's reluctancy to do developments.
I mean, as we are operating Germany's largest land bank after the Catholic Church. I think we respectively disagree that it can't always be the land price. Yeah, I think the developers need to get their building costs down. I think as Germany is sort of also required to look at a shift in industrial sectors. I think modular housing and new forms of constructions play an important role to that. I think there are a couple of firms operating already in the sector, and if you look at hybrid wood solutions, I think that conforms also with what Caroline was saying about the importance of ESG and the sustainability angle. So I think for us it's yes, we would like to see more developers developing. We would like to see more counterparties to be fully solvent and financially stable, because I think that is still critical in the system, that you have the right transaction partners. And we would like, of course, to make also a contribution to the residential sector, as we have large land plots, in order to satisfy the demand for housing. And I think, picking up on what Kruno said, what struck me in this morning's INREF conference, they showed basically the charts of demand for resi, which were all going up across Europe, and then they showed the amount of permits that all went down across Europe. And I think that's really the paradox that we're facing, and it looks very inexplicable from the outside. So I think what we also need is a healthy effort to reduce bureaucracy and to fasten our permitting projects, because otherwise we're not getting there.
So that's a real block on the market from your perspective, and that's coming mainly from cities or government planning, essentially. Is there much chance of actually making a change on that? I mean, it is happening at the moment in the UK, but it's taken 20 years to start doing that, and there is now a change in view on it.
Well, I think one can spend hours and days to debate on what we can learn from the US example. But I think what is important is for federal for the Federal Republic is to harmonize building law. Is to reduce bureaucracy. We've seen in Berlin the schneller Bauengesetz, faster building law enacted, and I think hopefully we'll see also from the incoming coalition what they said in their consultation paper, that they actually put that into action and help the industry to deliver faster to the people who actually need to have affordable living space.
Okay, let's drill down a little bit, because I'm interested in the residential side that we're discussing here, and obviously senior living, Caroline, we actually also run the Senior Housing and Healthcare Association for Europe, which then also has views fed in from both Asia and North America, especially North America, where they're kind of further ahead in terms of some of the senior living side. But what's your overall sense, I suppose, of, you mentioned there's demographics there driving that, but let's drill down a bit more into that in terms of the specifics of that, what type of accommodation, where is the opportunity here if we drill down into that sector?
Yes, thank you. First of all, I wanted to underline what Lars said, that it looks inexplicable from the outside that building permits are going down and the demand for housing is going up. Well, it's inexplicable from the inside as well. And then when we look at regulated rents, which will surely not help to push new developments, it's really politics going somewhere, which is not helping at the moment. I see the effort in accelerating how to get building permits. I think in all regions, the local governments are trying to get that done quicker, and of course it helps. It also helps to have prefabricated housing, because of course prefabrication only works if I have something similar built in Bayern as I have in Berlin. And then coming to senior housing, because it's a sector where prefabrication actually works very well, because it's small apartments. It's not the flat or the house of my dreams which I'm going to build, but it's something rather small which can actually be done in prefabrication. And something I've also learned, and I thought it was very interesting that prefabrication is actually also the quality is much better. I always thought that it's quicker and it's maybe cheaper, but actually that the quality is also going up. And of course, ESG matters a big point in prefabrication on all sorts of housing and of course senior housing. So yeah, what are the trends in senior housing in Germany? When we started our first fund on demographic change, it was extremely difficult to get the product because everyone wanted to sell care homes, and this is not what we want. We want to have housing for elderly people to live independently as long as they can. And I think outside Germany there are already some schemes which work well, which are also well accepted by the senior population in Germany. I think the first thing is, well, I call it make senior housing sexy, so that someone turning 70 actually think it's something I aspire. I want to live in a senior housing complex or in a mixed complex, and it's not something where I'm pushed to live in because I have no other choices.
And Lars, any views from your side? I mean, there's. Oh, sorry, Kruno, yeah.
Yeah, I think maybe I have a few thoughts and also comments regarding serial building, etc. Because we have, we did here a very big investment and followed this very closely. I think when you look at the overall situation, so we need 400 to 500,000 units per year in Germany to fill the gaps and the supply-demand imbalance. In the peak year where the interest rates have been very low, we have been at 250,000, up to 300,000 completions. And there the whole construction capacity was completely overfilled. So, and therefore I think perspectively it makes a lot of sense to go into serial building and modular building. The issues you currently have, and we have a product type which is serial planned and where we combine the best of both worlds, so prefabrication and classical building, and we come out with total investment costs without land below 3,000 euros per square meter, including VAT. So you can, today, you are able to build affordable. Let me add one thing. The German government, in overall, and I'm not talking about bureaucracy, I'm talking about what the government is getting, let's say, on taxes and payments, etc. So the stake of the state in living space is 37% of €1.37 is going into the pockets, different pockets of the state. And this is a big issue. So if we want to reduce costs, for example, we are developing social housing, and we are paying VAT on the construction works for social housing. Does it make sense? Does this make sense? Not really. So I think there are a lot of things you can do to make it better. And I agree also that, let's say, cutting off bureaucracy is a good point. When I look at the German situation, the states, the cities, it's really a very, very big task to do it because it's a long time period you need. And I think for the shorter time period, the German government has to think how to reduce the costs on living space they are currently asking for, the 37% on total costs.
Let's pick up a little bit in terms of some of the other sectors as well. I'm going to come to you in a minute on the logistics side, which of course is still very popular in terms of the investment side. But I mean, Patrick, just from your point of view, everybody could see that there is something around data centers. You can see obviously there's going to be increasing data as soon as you need, as soon as you have artificial intelligence, that's going to increase demand. If you have self-driving cars, that's going to increase demand. So you can see that demand is going to increase. But how much of a specialist investment is it? How big is the opportunity? Who can actually come in? Is it really just for specialists? What's your take on it?
Yeah, it's even it's a question. is it real estate or infrastructure or private equity? So, and if you have a look at the costs, if you see the land plot, the building, together this will only be 30% of the cost of build a data center. 70% is the house technique. And then 4 to 7 times of that is the IT in the data center. So is it real estate from this perspective? Not. But it would be good if more developers and asset managers step into this and learn how this works, because we need this. And it's not that difficult to build. It's a word, a powered shell. So building, including the energy. The work which has to be done before is even not that easy, and especially not that easy for the international bigger companies with, let me say, the very big pockets. If they are speaking with the untere Wasserschutzbehörde, don't know how to translate, and say, no, you can't build their data center, it doesn't work. And they say, oh, I have the money. They say, no, they can't build. So it's a culture clash, and you need local expertise, local network to the municipalities, and you need to know how the system in Germany works, that you can build a data center, and you have to put many things together. It's not even the plot, it's not even the energy, because nothing against the Bavarian wood, but if you have 200 megawatts in the Bavarian wood, it's nice, but who will go there? Yeah. So there's still a need to have a plot near bigger infrastructure, bigger towns. And even if you have a look at the waste heat, where will you put the waste heat in the Bavarian wood? So there are many things which come together for developing data centers. It's very much more than a usual development, but it can be done. It's not a rocket science at all. But I have to point out that many of the landlords are getting dollar signs in the eyes. When they hear, okay, there's a potential data center plant on my side, and at least this will not even work. Some people are saying huge amounts of money per square meter price in Frankfurt, but Frankfurt is even not Munich, Hamburg, and even not the Bavarian wood. So it's not that easy, and but it's necessary that more companies will do this in the future.
Okay, good. Did you want to pick that up?
Yeah, I think, I mean, from picking up on what Patrick has said, I mean, I think we need to differentiate between the different use cases. I mean, you have web hosting, where you have to have a number of redundant data centers, mostly clusters of 3. I guess there is an opportunity to build standalone data centers for machine learning, and these are highly energy consumptive. I mean, what we do on the land development side, the biggest constraint that we see actually is indeed energy. Yeah? Energy, getting grid connection, and there are a number of different players in the market who do the arbitrage between getting grid connected in 6 months, 1 year, or 3 years, and there's a lot of money involved, particularly from the hyperscalers who have different preferences. I think here again, Germany needs to realize that it doesn't have enough energy to power the computational needs. So we need to look at what other countries do, like, for example, Ireland, where they put on-site gas power production in order to get grid independent. Yeah? It used to be around Berlin. You could basically speak to TSO and said, I'm calling first, and they would give you grid connection. They rejiggled the system and said, give me proof of funds, show me that you're buying a transformer, then we give you land, then we give you a point in the queue. So I think it's not trivial. It's a lot of technological risk about what, I mean, we saw it, what is edge data centers versus larger data centers. How will they be responding to kind of the chips and usage? So we like and support what Patrick is doing. We approach it purely from a land perspective because we're not able to predict sort of the technological risk, and as you say, the money involved in building is quite substantive.
Okay, good. I wanted to pick up a little bit just in terms of we've got between a market correction and a weak economy. The weak economy part of that, I'm just interested because of the financing side. How do you see that, Caroline, in I suppose in terms of the corporate side? Because you've got a lot of businesses that own their own real estate. Do you think that's a way where people might look at alternative financing, for example, and move towards sale and leaseback or different things? What's your view?
Yeah, that's something actually I'm looking at, and I'm hoping that it's going to happen because, of course, Apleona as a big facility manager, we're in contact with a lot of German and international corporates, a lot of German international industries, and with European economies being rather low and going badly, I think in order to get cash, they could look into sale and leaseback contracts in order to get more liquidity into their company. I think it's something which could be interesting. So far, I have not had many requests in that direction, but it's something I would really like to dig further into because it's a win-win situation for everyone. I mean, us getting their real estate and developing investment schemes, and them getting liquidity to their company and being able to focus on their core business, which I think is what we all should do, really focus on what we know how to do it and not, lose time and money in managing corporate real estate when there are real specialists who could do that for you.
Okay, good. And we've all talked a lot here about niche strategies, about the focus on value add, but does that mean that's kind of the only game in town at the moment? Is everybody looking for value add, and does that mean people are looking at, that nobody is coming into the core space at the moment and there's different opportunities? Does anyone have a view on that?
So I can say that we have sold in the last quarter last year, let's say institutional or let's say projects to institutional investors for a core price. So there is still appetite. Of course, currently, let's say the biggest part of the market is focusing on value add, but it means from my perspective, when I look at and focus on resi, if you have a acceptable price for land, and then you do the development, you will find the clients either private or buy-to-let or institutional, because there is appetite. Let's say the market resi is struggling because we are coming from this, very low interest rate situation. The affordability has changed massively, and this of course has an impact on pricing. For new build, we have seen 6 to 10% price correction. For existing properties, depending on the energy efficiency class, up to 50%, and depending on location. So what let's say what the money is currently doing, focusing really on good locations. So location is getting more and more important, as it has been before the interest rates were so low, where everything was going and working. Now the people are focusing really on classical values of real estate, location and demand. So this is what we are seeing and thinking.
I would concur with Kruno. I mean, it depends on your cost of capital, right? And I think, in the end, There are a lot of insurances and insurance companies and pension funds who have their liabilities in euros, and they will continue to look also at core product. I mean, when we started the conversation, Kruno said there's a lot of activity coming from family offices, and they've been the first providers of liquidity, then followed by the Americans. None of these sources of capital are known to be particularly low. Yeah, so they're looking for high returns, but I think as institutional investors have rebalanced their portfolios, they digested perhaps some of the losses from the crisis, they're coming back. They need to also make an impact and put their capital to use for society. So I do believe that there's opportunity for core returns as well. And I think, again, to Kruno's point, if we talk about Germany, I mean, look about the depth and breadth of what the country can offer. We have top 7 cities. If you look at Spain, you look at Madrid, you look at Barcelona. If you look at Italy, it's more Milan and perhaps the northern belt, and France is even just Paris mostly. So Germany has that opportunity, that liquidity, and I think that it's an opportunity for all of us.
And maybe just Lars, with you, just picking up on the light industrial, logistics side, is that a bit of a casualty in terms of the economy, or is this now so disconnected in a way that actually that's still going to be attractive?
I mean, Blackstone is the largest real estate investor in the world, and they're super excited about logistics, and they continue to be excited about logistics. We would heartedly concur that logistics is important. And I think now that the government has put a lot of money into particular sectors, I think there will be an entire sector that has to be rebuilt its value chain and logistical chain. So that's an opportunity. But also, I mean, to what Caroline said, light industrial, I think opportunity to release capital to the German Mittelstand is important. I think when we talk about our light industrial, we will need to explain how we do the underwriting and the credit work on the tenants, because often that is something that you can probably talk more to, but I think that's an important aspect of the sale and leaseback. But we're very, very excited about that as well.
Yeah, go ahead.
That's true. So we have within our group, it's not BF.capital, but within our group we have a leasing company, and I fully agree. So in the end, especially in the German Mittelstand, you have to do a proper credit analysis, and it's not so easy. You don't have external ratings. You have to analyze the balance sheet, and therefore, so in this segment, in the leasing, but anyway, lending is a local business. You need to understand the market. You need to understand the credit risk in the end. So
good. I want to make sure we've got time to have questions from you if you've got any. So I'm going to be starting a sentence here that lasts around 5 seconds, and I'll be looking to see whether anybody puts their hands up and has questions or wants to stand up and shout them out if they feel even more strongly about it. But if you've got a question, do feel free to shout it out, put your hand up, let me know. I will scan the room just briefly like this. Come back to me if you do. There's about 7 minutes left. So let's pick up on some of the other opportunities. We've talked about a little bit of distress in the market. Is distress going to be an opportunity or not? Caroline, let's start with you.
Yeah, of course, distress is always an opportunity. Someone else had problems doing something, so if someone new comes in and finds a solution and brings mostly the needed equity, but also the know-how, I think you can get very good projects at pricings in locations. We talked about in locations which before you couldn't. But then often, unless you've been watching the particular scheme for a long time, you buy something in a nutshell, and this is not so easy. So especially for international investors, which there are not so many here, I've learned I think you need to partner up with local people really knowing the projects you want to step into. If it's something you've followed for a long time, I think it's excellent.
Okay, good. And it'd be interesting just to pick up maybe, Kruno, starting with you on this one. In terms of the kind of fundamentals like supply and demand? What are we positioned there with? Are we looking at potential rental rises in different sectors? What's your take on that?
So regarding, I will focus on resi because this is where I'm familiar with. So we think that the rent price inflation will go further due to the fact that supply-demand imbalance is significantly further increasing. And regarding, let's say, also opportunities and regarding the house price inflation, etc. So we believe that if you buy today for a really market price land and start the development, I think prospectively, and this is what we also get the feedback from private equity, which their focus is to buy now in the trough, to build, and then to sell when the cheap money is back. So this is what private equity is currently focusing, and I think they are right. So if you are buying today, with the rent price inflation, the pressure in the market, the cheap money is coming back step by step, and if you are there with a very good product, I think you will benefit from, let's say, this potential. And what we do currently is really to focus on different types of projects, also on bigger land plots, complexity. We think that this could be also, what you mentioned, a very good, let's say, business to partner, because I think prospectively there's a lot of potential here. If you pay a reasonable pricing today and then deliver when the cheap money is back.
Okay, good. And Patrick, just for those who may be less familiar in terms of investing in social infrastructure, which you mentioned, what kind of returns are we looking at that? And I suppose what's driving some of those opportunities?
Yeah, we heard something about that from Caroline. Social structure means, in our view, medical centers or medical office buildings. And there's a huge need in Germany. It's even not a fashion trend, it's a mega trend, healthcare and especially ambulantization due to the closing of many clinics in Germany. And there was an interesting idea in the formerly DDR. It was called polyclinics, but we didn't know this in Western Germany. In Europe and the US, we know medical office buildings, and this is what we need to support the ambulantization, which is coming up due to the exploding costs in our healthcare system in Germany. And for this, we need more these buildings who can offer the space for a modern doctor's place. And this is very stable because they are paid by the system mostly, and so very stable and inflation linked 100%. So it's a very attractive risk return profile for conservative investors. It's not an opportunistic play. And the most important is not to build the building, to create the building, but to put the doctors together in this house and to put the users together. They can work together and to build modern practices. And the returns, 5 to 8% per year, cash on cash is it depends on the LTV, but it's possible. Yeah.
Okay, good. We've got about a minute left, so we're going to do 20 seconds each on, I guess, for those investors that are in the room and those who will be listening and those who will be reading what's been said afterwards. Where are the investments? So what do you want the takeaway to be about the German market, and where are the opportunities? And let's start with you, Lars, and move our way down to you, Caroline.
So I would rather make it a general invitation to invest in Germany. Yeah, I think we are now at the point that we have a lot more clarity. I think we have a lot of fiscal stimuli that will be coming our way. I think Germany has proven more than once in its post-war history that it can recover and rebuild. And I think that's an opportunity. You can agree and have a relative view on individual sectors, but I think my broader invitation would be to invest in Germany in the first place. We're the deepest real estate market in continental Europe, the most liquid, and we have a very strong position as the third largest economy in the world.
And that would need a lot of land as well, Lars, I would imagine.
Yeah.
Kruno, over to you.
Yeah, what has encouraged me in the discussions at the Mipim was, the, let's say, international investors are looking quite more positive than the Germans, because the Germans are most critical to themselves. So therefore, I think we could be optimistic.
Okay, good, Patrick.
Following what Lars and Kruno said, invest in Germany. It's a very stable market, and the polycentric structure you mentioned, Lars, is an advantage we have in Europe against all other countries. And invest in conjunctural independent strategies due to the decreasing economy. Some say recession.
Great, Manuel.
Yes, and it's the right time is now to invest in Germany. Don't wait for opportunities that might come or might not come. They are on the table already.
Caroline, final word from you.
Okay, you just took my final word. He thought, oh, nobody said it yet. Now I've got the opportunity to close. No, actually, it's, yes, please don't wait until all good opportunities are gone and good assets have been acquired by overseas investors. We should also, the German institutional investors should step back into the market and start investing again.
And if the weather was doing what it should do, we should have, at this moment, we should have had the clouds disappearing and a burst of sunshine come through. But because it's a late session, that was not going to happen. But I have imagined that in my head. So we're leaving on a positive note. Thank you to everybody for coming. Enjoy the rest of Mipim. And the view from the panel is maybe don't even wait until you get home. Start talking about investing in Germany right now. Join me in thanking our speakers. Thanks very much, everybody.